Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and the odds are that you're watching this video because you got an email notice from me telling you that I'm going live today. It's Monday, March the 15th, about 3 o'clock. I bought 10 stocks this morning. I'm going to show you each one of these stocks, try to explain to you why I bought them and why I bought 10. I'm actually doing this in a Robinhood account I've had sitting there and sort of neglecting. I've got a large account that has well over 100 stock positions in it. I have the bulk of my money in that account. But a couple years ago, I set up a small Robinhood account with a couple $1,000s because I wanted to experience what it was like to use Robinhood. It was starting to catch on. I had no idea it would explode like it did in 2020 with millions of people opening up accounts and starting to trade for the very first time. But I did open that account thinking, hey, maybe, I can use this as an educational thing, but I sort of just neglected it. And last year, at some point, I sold all my positions when the market was falling in March that I had in that account. It wasn't that many, and just threw it all into IAU, a gold exchange traded fund, and just completely ignored it. And that fund shot up and peaked out in August and came down with the price of gold. And then I sold it a few weeks ago when gold broke a recent low. And then I actually hedged with a short ETF. And then Friday, and then I forgot all about it, honestly. And I was doing all kinds of trades in my own main account. But then this morning, I decided to start paying attention to this again, maybe with you, something we can focus on together. And I bought several new positions, and I chose these based on the sector they were in and the position the stock is in. They're all stocks I own in my main account, but they look to be ones that have a good chance, I think, to go up over the next, let's say, 6 to 8 weeks. As altogether, I think they'll outperform the market averages. So I'm focusing on some sectors and some stocks inside those sectors that have very constructive stock chart patterns. However, as doing these YouTube videos, I started a series called Stock Trading 101. I've done, I think, 5 videos in it. I'm going to add this video to that series once the recording is up and so forth. And these previous videos have been kind of like building blocks off one another. So this video, I'm going to start out with a question that a lot of people have when they get into trading. And that is, how many stocks should you own in a brokerage account? And it doesn't matter if that brokerage account has $500 in it or $5 million in it. You do not want to have all of your money invested in one single stock. I don't care what the stock is. You don't want to put all your eggs in one basket. Well, then how many stocks do you need to own in order to control the risk of position size, diversification in different asset classes that aren't trading with another? That's one topic in sector investing, but just pure position size of that. You just want to focus on that risk factor. Then how many positions should you own? Well, mathematically, that has been studied by mathematicians. And a couple years ago, I went and found the scholarly literature and economics journals that examine that question. And let me show you what the results are, and then I'll start talking about the stocks that I bought today. So anyway, I did this article, How Many Stocks Should You Own? And found the best studies about this. And I got a link to this article on the blog post with this video, so you can go back and read it. But to quickly show you the results of the mathematics, the calculations they did, here you go. You know, what's the ratio of portfolio standard deviation to standard deviation of a single stock? That's the right column. Expected standard deviation of annual portfolio returns is the middle column. You know, obviously the larger number of stocks, assuming you're dividing your portfolio up equally in each one, you know, the more you got, the less each single stock is going to influence the portfolio all by itself. But at some point, you know, simply adding stocks doesn't make all that much difference. So to make a long story short, having two stocks instead of just one, you know, as we're speaking 50-50, you divide the portfolio up 50-50, doesn't really make much difference. Four, if you divide your portfolio up into quarters, still doesn't make much difference. Imagine if one of those stocks fell, you know, 10% in one single day because of bad news or something. You know, that would make a 2.5% loss on your account. Pretty nasty, but that's just as likely a nasty loss of that size is just as likely to happen if you've got two stocks. If you got one, it's you know, you can almost bet on it eventually happening. But to make a long story short, basically getting to 10 stocks does diminish the portfolio risk when it comes to position size. You cut the risk in half from having 10 to simply one. And so that's why I've got 10 stocks in this Robinhood account. I bought these 10 this morning. That's not optimal diversification, just simply accounting for position size. You really get an optimal risk factor once you get into the 20 or 30 range. 10 is still good, but you can reduce the risk more in the 20 to 30 range. And the thing is, if you go beyond 30 positions with each position of equal size, then each additional position really adds nothing when it comes to diversification. And when you get to 100 and higher, it really adds nothing. That said, I actually have more than 100 individual stock positions in my account. That's because I'm not simply thinking of what I'm doing as buying stocks, but investing in sectors and using the stocks to do that. That will be something I'm going to talk about in much more detail, because that's actually one of the most critical factors in picking out what stocks you own. And I've actually done that today. I'm focusing on one, two, three, four sectors in the stocks that I bought this morning. Even though there are 10 stocks, I'm spreading out in four different sectors. Personally, in my main account, I'm investing in many sectors, many different things, and things outside the United States. I've got just about 14% of my money invested in stocks in Turkey, in the Turkey exchange traded fund. I got investments in Germany, investments in Russia, investments in agriculture commodities. A small investment I made recently in Asia through an ETF focused on Asia. I got investments in currencies, all kinds of stuff. A lot of investments, as you know, recently in the past few months in energy stocks. The problem, though, is that these things I bought last year for the most part, and they've gone up so much that they don't have a great entry point right now. And I'm not confident that they will all outperform the stock market over the next, let's say, 6 to 8 weeks. So the stocks I bought today, I bought with the idea that the sectors that they are in can beat the S&P 500, and together that's my goal. So I did not buy the ARK ETF. I did not buy Tesla. I did not buy Square, stocks that have broken charts, or ETFs with broken charts, but things I think that are in a good position. So let me talk about two or three of these. Well, let's talk about these sectors, then we'll talk about the stocks. So the first sector is gold, and the GDX ETF is an ETF for gold mining stocks, and silver stocks and gold stocks tend to trade together. It's gold, obviously, and mining stocks, something I've talked about all the time, but they've been in a correction since August. And I believe that correction is sold out. I didn't call the exact bottom. I wish I had, but here we are, a little bit, not that much farther off of it. And I think we're in a position now to rally back up to the top of the range for gold and the GDX ETF. Resistance probably is, it's above 40, probably, the 40, so say 42 through 44 price range right there. That's all I'm targeting for the next couple of months. We break out for that eventually. I believe we will, and this thing will go completely crazy, have another giant leg up in what I think is a bull market. But one of the things that made me much more positive on gold and mining stocks is gold. The RSI and gold fell below 30. I did a post about it this morning. If you get my emails, you're on my website, then you know exactly what I'm talking about. That was my key message for this morning. That I think gold's going to rally. I think it's oversold. And one thing that happened on Friday is the TLT ETF made a new low, and recently gold has been falling when TLT falls, and TLT had a big gap down and gold went up. So that is an alert that maybe gold is so oversold that further declines in TLT will not matter, or else gold and silver are forecasting that there's a short-term low of some sorts coming in TLT. Either way, I think gold is something in the mining stocks that we can look to rally, for the next few weeks, next few months, and that's a good thing to be a part of. Now, another sector I'm focused on right now is the real estate REIT sector. It had a breakout early in February and has been outperforming the Nasdaq and the S&P 500. This isn't an ETF that tracks the sector, but there's individual stocks in that sector that are completely soaring, going up much more than this ETF, and some that have a better buying position than this ETF does. So I bought a bunch of REIT stocks in January, a few in February, and I bought a few in this Robinhood account that I'm going to share with you in a few moments. And another sector that I think is great is the shipping stock sector. There's not an ETF for it, so I'm just going to pull up this stock, which is a shipping stock. There's just 24 or so shipping stock companies. These stocks tend to pay great dividends. They're bulk dry carriers and oil tankers. That's what they are. And they go up when shipping rates go up, which happens when oil prices go up and when international trade goes up. And if you follow, and they got great long-term charts, as you can see, I think, in this position. But also, the shipping rates have been just going up because last year was a secular low in global trade, in commodities, and in shipping rates. And if you get my morning emails, if you don't get them, you need to get on my website, click any of the blog posts, scroll all the way to the bottom, and subscribe. If you got it today, then you saw my article on gold as the headline. But what I tend to do is I put a list of the top stories that are getting my attention every morning before they open. And one of the articles in here, and it's a story I've been, linking to this theme, is what's going on with shipping. The ports are backed up in the United States, and it's full steam ahead for Wall Street shipping stocks. There's an article explaining why. And I've been focusing on this. Is one of the things I've been focusing on in some of my posts and some of the news stories I link to. Totally ignored by CNBC. No one talks about shipping stocks because it's a small sector with only 24 or so stocks. But these stocks, when they have bull trends, they can go up a lot. You can see what they did in 2009, 2012, $3 went to $8. These are big percent returns. There's no reason this stock, and I do own it, can go to 9 or 10, assuming current conditions maintain. And I think, global trade is not going to shrink from now to New Year's, but if anything, will expand. So let's look at the stocks. And again, this is a Robinhood account I have. And I think what I'm going to do is start, look, if using this account to focus on 10 positions, and then we can talk about them going forward. I'll probably sell one, buy something new when I see something better line up. I may sell half the positions or half the shares and hedge, at some point in the next couple months. Because I had been concerned about the stock market having a correction. We saw the Nasdaq take a big hit 2 weeks ago. But at this point, the action recently, where the TLT fell even more, and last week the stock market went up anyway, that tells me that the yields aren't pressuring the stock market at the moment. The issue may return later, but at the moment, the broad market is more looking at growth, and also I think there is a rotation out of technology and into stocks that are going to benefit more from the economy improving from this point into the fall, at least. So, Netflix was last year's play. Zoom was last year's play. Tesla's a fad. Other stocks are just going to do better going forward. And that's part of what's going on. And REITs are one of those sectors that money's flowing into. So are banks. We've seen money flow into energy, but at a huge, incredible rate. I mean, Exxon's a stock I own that's just been amazing. But I think that sector may take a little bit of breather here because it's just gone up so much. So money doesn't just want to go in everything that's up the most, but it looks for buying positions. So these are the stocks, and they're spread out. So WPM and they're not showing you all the positions here. They're showing you 7 of them. So here we go. DHT. We're gonna look at the charts. DHT Holdings, that's a shipping company. Euronav is a shipping company. Pan American silver mining company. Scorpio Tankers, a shipping company. Columbia Properties Trust, that's a REIT. Realty Income, that's a REIT. China Petroleum and Chemicals, that's an energy company. I didn't want to put an energy stock in the portfolio, so I looked for one that hadn't gone up like Exxon. I wanted just to get a little, 10% is in energy of this portfolio, basically. Wheaton Precious Metals, mining stock, silver mining stock. Franco-Nevada, gold stock. LTC Properties, a REIT. So we got 3 mining stocks out of 10. 1, 2, 3. 3 REITs, 1, 2, 3, and 3 shipping stocks and 1 energy stock. So I'm spread out 3 stocks focusing on 3 different sectors: gold and silver mining, shipping, REITs, and then 1 energy stock. That's an allocation I think can outperform the stock market over the next 6 to 8 weeks. And I'll probably do video updates about these stocks, these positions, and we'll just follow them together. I can't. If you notice what I said earlier, when I went, how many stocks should you own? I said 20 or 30 is the optimal level. That's from a risk management standpoint, if you're only looking at position size. But I really can't. I got over 100 stocks in my account, main account. But honestly, with the idea of talking about them with you and other people on the internet, I just want to focus on 10. So that's why I picked 10, but I don't want to do 6 or 4 because it's too risky to have, 4 positions in account. But we can do 10. I think we can talk about 10 together. But if I was, I got over 100, I've got, and that's because I spread out in lots of sectors. And I'll talk about more about that in future videos. But let's look at the charts for these stocks. We'll start with wheat and precious metals. I'm just going to do a 10-month chart. I don't like showing maybe I need to do more than that. You can't really tell much from this. So here's wheat and precious metals. As you can see, it's got a similar chart to GDX. PAS is in a great position. It's trading like silver, and silver's been outperforming gold, ticking up as we speak, actually, since I've in the past 25 minutes. Here's Franco-Nevada. All these I bought right on the open, by the way. So these are the 3 mining stocks, deeply oversold. And I'm looking for at least a bounce. I'm not going to try to predict what's going to happen after 2 months. They could break out. What if GDX goes through 44? The next thing you know, you're on a massive run. But I'm just thinking when I chose these stocks, I'm just thinking 6 to 8 weeks ahead. That's all. CXP, that's a REIT. So you can see that this chart pattern, it's kind of breaking the recent high, whereas the RWR ETF already did it. Another REIT I bought is LTC Properties, and then Realty Income, and all these pay nice dividends, over 5% dividends. So those are the 3 REITs. Let's look at the Chinese energy stock. So you can see this one hasn't gone up as much as Exxon. It's still, under a low of the other week. So this has the potential to shoot up to 62 if it can close above 58. And if it doesn't, I don't think this is a stock that's going to crash over the next 6 to 8 weeks. The more negative scenario, I suppose, if you want to think of it that way, is it will just simply consolidate. In my main account, I bought this stock several months ago, so I'm up on it nicely. Now let's look at the shipping stocks. When it comes to actual gains over the next 6 weeks, the shipping stocks, I think, have the best potential to create the biggest gains, although miners can move a lot too. So here's Scorpio Tankers, a nice pattern there. The momentum is strong on these shipping stocks. DHT Holdings, it's breaking out today. Basically, it's up 5%. EURN hasn't broken out yet. You can see resistance is the 950. That's basically the high of February. It's also high of September and August. So this is one you may want to keep your eye on if you don't want to, if you want to look for a really, really safe trade. Just chart this one out. If it can stay below 950 for a couple of days, or even 2 or 3 weeks, and then break out, that's an incredible entry, low risk, high reward trade. Because if it lines up like that, that's a quick return you can make, and put a stop loss below 9 or something. So I think we've gone through all 10 stocks. And again, I chose 10 because I want to have some control over the position size, but I didn't want to buy so many that there's no way I can really remember what I'm doing in this Robinhood account and share it with you. It's an account I tend to forget about and neglect, for months on end. So this is going to help me uh, motivate me not to neglect the account. And it's going to be fun talking about 10 stocks or 10 positions with you. So, and it's a way for us to kind of, I think, feel like, we're doing this investing and trading together, so to speak. We got an account we can share. Now, I want to point out something with you, though, about these stocks. Let's see if any of them are ranked as one of the most owned stocks by other Robinhood people. Any of them. Don't see any yet. Nowhere. Nowhere. They own ARK, though. They own Exxon. Exxon's a stock I got a position in. There's a mining stock. It's got to be one under $1, but I don't own it. But they own that one. So it's rare you see them own a mining stock, but they do today. So none of these stocks in this top 10 list or 10 stocks I bought today list do they own, which is kind of interesting. I don't know why they love AMC Entertainment and Sundial Growers, and in my book Tesla is a broken chart. It's an ARK is a broken ETF. Tesla is its biggest position. So those are things I'm going to be watching and see how do these trade out over the next couple of weeks, because I shorted some other stocks in this ARK ETF a few weeks ago and covered those positions, but I may re-enter them next month or in June or some point if they continue to lag the performance of the rest of the stock market. So anyway, I haven't been able to look at people's comments or questions, so I'm just going to look at them today. Someone's asking me about Aftermath Silver. I own. I still own Aftermath Silver. When gold broke down, let's pull up gold. So in February, gold broke this 1750 level and fell below 1700 towards 1650. I'm actually more bullish. I'm pretty excited about the way gold did after that decline. However, when it closed below 1750 a few weeks ago, it did it on a Friday. That really worried me because that was the low of November. And in the past couple of years, especially 2018 in August, I made a comparison to that. But there was a couple other times that gold would break down through something that had been support for a couple of months. And then that would be when it would dump really bad. And you might have a hard 2 or 3 days of selling, even in the mining stocks. So on that breakdown day, I didn't really sell. I didn't sell these small cap mining stocks, but I did do some small hedging. I did sell Newmont and a couple large gold Barrick. Actually, it wasn't much in my account, but there are positions that I was down on, and I sold them with the idea that I just buy back in 30 days, and I take the tax loss and and then just buy back. And that's still my plan. That's what I'm going to do. But that's all I did. I didn't like sell out of everything and try to jump back in, but it did make me want to hedge. And that's one reason I focused on shorting, Nasdaq stocks for a few weeks, then stopped doing that last week, essentially. But I think with what happened in gold, that decline wasn't that bad considering it broke down. And most of these small cap mining stocks, they didn't really fall at all. Aftermath silver pretty much held up, for instance, and that's what most of them did. Yeah, they might go down a little bit, but there's no way do you think that they crashed. So I see this as pretty positive and perhaps could be viewed even as a false breakdown. But last week I was even more encouraged because the US dollar reached a high overbought reading. And then, of course, the yields kept going up, and gold just kind of ignored it. So to me, gold's oversold, and it should trend up. So I'm not so much worried anymore about the downside in gold, silver, these mining stocks. Silver, of course, and I'm just going to pull up the SLV ETF. It's live. Silver's got a better chart than gold. Silver didn't pull back as much as gold. Today, Newmont's up pretty good. But if I had to, PAS is a stock in the big cap world, I think is likely to rally, be one of the leaders on a rally. It's silver, and it's got a really nice chart, better chart than Newmont. Barrick has been, it's lagging. It needs to jump back up to 25. So anyway, that's just the thoughts that we probably saw what was a false breakdown in gold, which is good, for gold people. Do I use a risk to reward calculator to determine the number of shares to purchase? I just figure out how much money I want to put in and divide the shares by that. That's all I do. These short sellers aren't going to stop destroying companies. We have to consolidate. ENVB, TCB, XTLB, all retail traders should be in these names. Fulfill the promise of GameStop. I don't know what those stocks are, but I think it's silly to try to buy stocks on the idea that short squeezes are going to come. I only buy stocks if I believe in the company or the sector that the company's in and the chart. That's how I decided the 10 stocks I bought today. None of these stocks are short squeeze plays, and I'll never get involved in that because it's a silly trading strategy. And GameStop, I believe, shows why it's a silly trading strategy. I just don't think that's good. Mike, take a look at Sea Energy Maritime ship. I didn't mean to yell there. I just think a lot of people are getting misled and tricked into getting into fad plays, fad trades, and trying to fight short sellers, is bad because normally these companies that are heavily shorted, typically there is actually something wrong with them, and they're not good long-term investments. Doesn't mean they can't go up for a week, but what happened with GameStop and AMC, I think should teach anyone a lesson that that's not really a great short trading strategy. And the argument that real traders are suffering because people are shorting stocks, it's just silly. That's all I got to really say about it. How long do I think ARK can go up? I don't know if it's not so much how high can it go, but the period of time. That one thing that happened is ARK, and these stocks, Tesla and Square, a lot of the stocks in it, they fell so much. I mean, the Nasdaq fell like 10%, but like Tesla, I think fell 25 to 30%. They did fall so fast and so much that they became extremely oversold, and now we're getting a bounce rally. It could be that the extent of the move, as far as the gains, is done. But I do think that they could spend weeks sitting in this area of the range they're in without really dropping much. That means, yeah, some of them, it can go up more. I don't know. But I just think it's going to take time for them to start to drop again because they came out of a big oversold area and now they got to get overbought and then probably stay up there for a couple of weeks. And next thing you know, in about a month, we'll be heading into earnings season. So my guess is that ARK and these NASDAQ stocks, the market as a whole, will do okay into that April earnings season, which is about 4 weeks from now. And then we'll have to see how do these ARK stocks in the ARK ETF, how does it respond to earnings? Because I think that will tell us. That will be the danger point. Let's say second half of April to mid-May, and so that'd be something we'll watch then. Thanks for the great advice for years. Have you ever looked at GMGI? I don't really know. Never heard of it. Let's just pull it up and take a look. There's so many stocks out there. Gold Matrix Core. I don't know. I really have no idea. I don't want to. It does very low volume, 8,000 shares on $5. I just have no idea about it. But if it's trading with the other casino stocks, I would say this. Here's Las Vegas Sands, and I think these stocks are probably going to do okay going into the summer. The reopening in Las Vegas is kind of starting now. This weekend, today actually, the governor of Nevada said that the casino is going to be at 50% capacity. The very first week of June, Las Vegas is going to hold its first giant convention since the pandemic started. It's some construction concrete convention, and annually 60,000 people attend it. So that's going to be an important milestone. And so I think it will probably, the gaming sector, the casino sector will probably, as a whole, do fine for the next couple months. After that, I don't know. I'm not. It's hard to forecast beyond that. I find not because of the pandemic, but because what is going to happen with the more speculative elements in the market when inflation does come. It does seem like the yield story is kind of played out for now, but what if it returns in the second half of the year? And one thing with the whole stock market, the valuations on these stocks are very high, but what does that matter when until it does? So anyway, I'm probably going to wrap this up now because I've been talking for 40 minutes. It's quite a lot of time. And thanks for joining in today. Interesting day. It is fun to see, as you mentioned, someone mentioned the shipping stocks. It definitely is fun to see them do as good as they are today too. So y'all have, Las Vegas is actually a Macau casino play. Well, they one thing about I should mention about these casino companies, because I don't know if many people know this. Las Vegas Sands, Caesars, Wynn, these companies are operating companies. So just recently, Las Vegas Sands sold off the Venetian and the Plaza buildings in Las Vegas. What they did is they sold the real estate, but they're still going to operate the casino inside the buildings. So these casino companies that we think of, Caesars, Wynn, and so forth, Las Vegas, Wynn might be an exception, but these other ones, Las Vegas Sands and Caesars, they don't own the buildings. It's REIT companies that own the buildings. And this company here, VICI Properties, which I don't own, but thought about buying actually, they actually own all the Caesars properties, or an interest in all of them. And they also are now part owners of the Plaza and the Venetian. And this is a REIT paying a dividend. So something to consider if you are interested in investing in casinos or want to. This is the stock that owns many of the buildings and actually pays a dividend, whereas the rest of them are pretty much just operating companies. So anyway, that's it for today. And it's great to talk with y'all, and we'll talk again soon.